Whatever it is that's in the water at Anthropic, it's working and it has created unity. You've got to believe that the next round for this, Anthropic and SpaceX are all public offerings. Tesla trades at $1 trillion today. I think if Elon died tomorrow, they'd trade at $200 billion. OpenAI trades at $800 billion today. I think if Sam Altman died tomorrow morning, we'd trade at $600 billion.
This week, Anthropic goes to war with the Pentagon. OpenAI closes a $110 billion round. Block lays off 40% of the workforce.
I think we got the SaaS apocalypse all wrong. Every single CEO I talk to doesn't think they need 40% of their team.
The lesson is never underestimate big markets and momentum. The knife fight doesn't start until the TAM is like 60, 70% saturated. The prize for winning is to reinvent the company from scratch and the product from scratch every 6 to 9 months. Congratulations, it's a fun game.
Ready to go? We are back. Rory, last week, this man predicted one of the biggest layoff announcements in history before it came. He is that good at predicting the future. So this week's going to be even better. We're going to start this week in Anthropic with the Anthropic going to war but being banned, that issue with the Pentagon. Rory, do you want to provide some context for everyone? What's actually happening with the battle between the Pentagon and Anthropic before we dive in?
Okay, yeah. Reminder of context. What happened is that Anthropic actually has a $200 million contract with the Department of War. And in a negotiation about that contract that culminated in a rupture last week, Anthropic was seeking to impose a couple of conditions on the use of their model that the Department of War was not willing to sign up for. And specifically the two issues, as I understand them. And again, I want to preface all this by saying, unless you're in the room, you should assume that everyone who was in the room is spinning a version of this that makes them look good. So with that caveat, the two issues appear to be Anthropic wanting to specify two things. One, that you could not use the software, their models for quote unquote mass surveillance. And secondly, you could not use their software for autonomous weapons. Those were two restrictions they wanted to put on the use of their models. And the Pentagon's counter was, we want to be able to do anything that is, quote, legal. And that was the bid-ask spread. And it didn't converge. And on Friday afternoon, the Pentagon broke off the discussions and effectively threatened, though as yet I understand it hasn't been done, to at a minimum cancel the Anthropic deal, but also the supply chain threat such that other vendors selling to the Pentagon or even to the US government couldn't use them. So depending on how that threat is interpreted, it's either a mild loss of a contract or something approaching thermonuclear. And it's not yet clear, has that happened, or if it happened, what it means. So that's kind of the facts and circumstances. That's the facts, simply put, as distinct from the editorial comment.
Was it the right decision by Dario to have these principles and to stand by his beliefs in this way? Because Sam has since swept in and done a deal, and we can get to that repercussions on the consumer side. But Sam has done a deal in replacement.
I think he got swept up in a tough position, which is his team, his employees. Because I think Dario clearly, since the day he was lead safety researcher at OpenAI, has felt profoundly important about safety. In fact, they refused to release Claude before ChatGPT because he didn't think it was safe. They only released Claude under duress. Finally, he goes to his team and says a while back and says, listen, at least we can make weapons safer. It's going to happen one way or another. There will be AI in weapons. This is my understanding. And he convinced the team that what we will do is we will make them safer. And that was the justification. And to a lot of folks in AI, it's even Elon said a little while ago, I wish AI hadn't happened, but since it is, I'm all in on XAI, right? So if these AIs are going to be out there in the military, we'll make the safe one. And I think it just got pushed to the point where I think he has his personal beliefs, but I don't think he'd go to his team and say it was true anymore. It was just pushed too far to say at least we'll make it safer than our competitors were. At least this will be safer than XAI or ChatGPT or some tortured open source thing, because at least the good guys will be in there and we'll make sure we don't do the wrong source of mass surveillance, and that when we do target folks, which we've been doing with some form of AI for years, at least we'll minimize the collateral damage. I don't think he could say it with a straight face. So he said, I've got to step out on this one. Like, this is, I'll lose my team. Not only do I not believe in it, but I'll lose my team.
If that's the framing, then I can answer the question concretely. I think you're right, Jason, which means he was wrong. I totally agree. One of the organizing principles of Anthropic has been this, almost messianic belief in AI, the threat of AI, as yet the willingness to develop AI, because they're the only people who can be trusted with AI, right? I find that weird, but I'd be an idiot not to recognize that this has been an extremely successful unifying principle of this company. Right, which is why they still have the 7 founders when the other guys across the street have lost almost all but 1 or 2 of the founders, right? Whatever it is that's in the water at Anthropic, it's working and it has created unity, right? And he would be a fool in terms of running his business to blow that unity, and the man is clearly not a fool, right? So I get it, Jason, you're right. He had this belief around AI safety that is not just a lightly held belief in this company. It's a core organizing principle and arguably even the engine that has driven the enthusiasm to build that company. Given that, I think it was naive to try and sell to the government at all, at the Department of Defense at all. Because they too, unlike a lot of us who are just ordinary people, have an organizing principle, which in the case of the Department of Defense or Department of War is defend the United States of America, right? And they believe correctly that that's their task that they've been charged with. And the idea that someone's going to waltz in and say, I want a $200 million contract, but I'm going to tell you the safe way to use this is absurd. And I think the DO of Defense was absolutely right to say, we are not signing up for some bunch of guys in California to tell us what to do. We are the Department of Defense, empowered by the president and the Constitution to defend this country. Go away, little boy. So I think they were entirely right. If you wanted to not sacrifice your principles, you probably, and if you believe that, that you have really nuanced opinions on how AI should be used in war, then you probably shouldn't sell to the Department of Defense, because they really don't give a damn about your principles. And I know, I feel weird saying this, because I actually think I love Dario's writing and his speaking. He's some of the clearest, best writing I've seen on almost anything. And I happen to know, because I read it, as a big believer in Richard Rhodes' The Making of the Atomic Bomb as a book they share, right? And when you read that book, the first conclusion you should come to is General Goes didn't give a rat's ass about the scientists. He humored them. He gave them what they needed. He let them not wear uniforms because it made them happy. But when it come to the crunch, they weren't even in the room when they decided to use the bomb. And thinking that you're going to have the luxury of getting to be part of the decision is unrealistic, naive, and actually constitutionally wrong. I may not love the current administration, but they were elected by 80 million people. And Harry will remember, Tony Benn, the English politician, used to say a cabinet minister, a very left-wing socialist, whom I don't like in any dimension, but he had a great phrase for the civil servants. He turned to them and say, and who voted for you? And who voted for you, guys at Anthropic? Because 80 million people voted for us. And the Constitution says we're here to defend the country. So I think drifting into this situation, given that that's the core organizing principle, is probably a mistake. It might work from a business and a marketing perspective because you've got a huge bunch of outside lift from it. And on that basis, it's been great. But, this is the big but, you're now a little bit at the mercy of how the administration wants to handle this. Right? And the thing that's in your favor is they often have a short attention span and they move on. And the thing that's against you is they're quite hard-nosed sometimes about grinding you down. And if they want to grind you down, they can. I don't think they should. I think they would be wrong. I think they should say to Anthropic, you don't want to do business with us? That's fine. We'll keep our 200 million, but we won't grind you down. We won't declare your supply chain risk. We won't try and destroy your business. But you've drifted into a situation where it's at least plausible they can. I don't think that's a good idea.
If you were an Anthropic shareholder today, would you feel more or less confident today? You mentioned the lift. For context, they are now number 1 in the App Store, ahead of ChatGPT for the first time. They have a consumer brand which actually consumers care about really at mass for the first time. And Dario has presented himself to be a very thoughtful and progressive leader that cares about safety. As a shareholder, would you be more or less happy?
Same expected return, wider variance. By definition, the risk's increased, and therefore you should be unhappy. You were, even despite the lift, you were doing really well a week ago. You were clearly the dominant company. You made entire stock indices move at your will, right? You write a blog post and every legal tech company goes down 20%. You had a good thing going, as they say in that meme, right? And now you've drifted into the situation where you've got this ongoing fight with the government who has way more power, as you're suddenly discovering, than you do. I don't think you're happy about the increased risk in your deal.
I think we've entered an area where no one really cares as long as the numbers are there. No one cares. There's fewer ethical concerns. There's fewer anything concerns. If I just got my March 1 investor update at Anthropic and we just crossed 16 billion, my email back would probably be great job. With 3 exclamation points and maybe an emoji or two if it were on my phone, right? I mean, this is the world we live in. So we don't have the rights. I don't think almost none of the money in Anthropic has any rights whatsoever. I would say with most startups, it no longer matters what I think as an investor. It literally doesn't matter. Only the struggling ones doesn't matter what I think.
And then you don't want to care.
Yeah, then I have my board partner.
You cynic. But no, to be fair, I think the question is not, do they care about your opinion? The question is, how would you feel? And I think you're right. If numbers go up, you're fine. But I think you just have to accept the fact that in return for a significant boost in popularity, good, you have a mild existential risk that probably you can beat in the courts. But nonetheless, if the people on the other side of the table decide they want to be vindictive, can make things very hard for you.
Just one thing that I was thinking about to highlight, if we get to block later, right?
We will.
If we talk about the power of labor versus management, and I know we don't like these terms, they sound very Smithian and stuff, but it's true. At Anthropic and OpenAI, and we're at the extreme end of power of labor. I mean, people are leaving 8 figures of vesting stock at OpenAI because they want to work somewhere else after 13 months or 6 months. I mean, this is unprecedented. Even at the hottest startups, people used to stay, okay? On the other hand, for non-AI folks, for the blocks, we have the least power versus management ever. Like you're less than fungible. You're not even wanted, right? And so there's a subset of folks, and listen, Anthropic's probably at 15 billion. This is an important subset, right? There's a subset of folks, it's very weird, where labor has all the power, and Anthropic has done the best job of anybody. A lot of the XAI founders are gone too, right? This is like 2021 all over again. You've got to do whatever it takes to retain the team, like everything. If they want you to take on the Fox News dude, Pete Hedgeth, you do it. If they want you to tap dance on the roof of the company, you do it to keep the researchers, right? What Maggie told us, I didn't even know this, when we were in London with Harry, at OpenAI, they don't even let the salespeople talk to the engineers, the researchers. They're not even allowed, their cards don't work at the building of engineers because they don't want to be bothered by the go-to-market team. They're not even allowed to attend meetings in the good building. They've got to go to the building next door. That's protecting your talent at all costs, right? So that's why I think Dario had no choice. I don't think the team would tolerate anything else.
First of all, I love the labor capital distinction. And, you said it's really more Marxian than anything else. And I'm going to go with it, capital versus labor. And I think you're right. It's super interesting to see in a situation like Anthropic, capital is weak and labor is strong, because those are the most talented people on the planet who have the skill that you need the most. And you're right, in many other organizations it's weak. But I'm going to remind you, if we're going to do political economy, right, not politics, but political economy,
I'm going to defer to you here. Yes.
There is a third actor. It's called the state. And I think what you're seeing very clearly, now I just want to say it very clearly, is the state is more powerful than Anthropic. And I think that's the lesson you got to learn. You can have, and it's interesting, if you listen to one thing that some of the folks talking about AI, even 2 or 3 years ago, were hinting at this, where they're like, will the state intervene? And I think the state has extraordinary powers because it's the state. That state has, as Weber points out, the monopoly on violence within a geographical area, right? And I think that in terms of appeasing your employee base, you got to do what you got to do. But drifting into getting into a conflict with the Department of War on something where I think logically you're in the wrong because you're trying to interpose yourself over and above the people who are charged with doing this is just a bad place to be. And I would want to tiptoe back out of there. And if all it costs you is a $200 million contract in the context of a $14 billion business, you should declare a win and move on. Because if the state decides, for all this talk about AI being so scary, let me tell you what we learned in the last week. AI might be scary in the theoretical after, it could be used for this, it could be used for that. The state is scary in the real sense of we have laws, we have men with guns to enforce those laws, and we can take your company if we want to. And I bet you, even though you look at those laws like the Defense Production Act, you look at those laws like being declared, a supply chain risk, and you kind of go, I think I could win that one in court. It's still a sobering moment when you realize, the person in charge of the most powerful military on the planet thinks that you are a supply chain risk, wants to invoke powers granted to him by Congress to do that, and you've picked on them. I would have preferred to skip that.
And you've got David and the rest coming straight for you. Nonstop, right? It doesn't help.
When you're talking about the power that Labour holds, what you're suggesting with that, given Sam sweeping in and taking it, is that he does not face the same pressure from his employee base.
No, he did. His team hated that he did it, right? He had to immediately say he's going to unilaterally change the terms of the contract the next day. I mean, he's a very smart guy. He signed a few contracts in his day. That was numbnuts thing to say. I mean, I know he believes it, but we're just going to change the clauses ourselves on ChatGPT so that they say what we want them to say. I mean, good God.
I agree with Jason there, Harry. I think what the last 4 days have shown is the power of labor at OpenAI too. And it's ironic because the first time we saw the power of labor at OpenAI was the power of labor to insist that Sam comes back, which was back in 2023 when you had that magic moment when when labor basically said, we want to pick our boss, and the owner says, you're right, you should pick your boss.
So
right?
was Sam wrong to then do that deal in your mind? You said it was naive of Dario to maybe enter it. Do you think Sam should have not entered it also?
It's the most entertaining of all possible outcomes. He's probably right on the merits. And as often happens in life with a certain kind of person, it's only when you're absolutely right on the merits. It's the one thing when you actually believe what you're saying, and I read what he's saying about in a democracy, we as the final arbiter should be the government, not individual people. I actually think he was right on the merits on that, which of course means pleasingly it's the one thing that's going to bite him on the ass. Right? If you see what I'm saying, is that ironically, the one time I think he was like entirely correct in terms of how companies should interact with the Department of Defense, it's actually going to be, and I think actually signing the contract on the merits wasn't awful, but you're right, his labor doesn't want him to do that. So I think in terms of opening Pandora's box in his company, he was wrong.
It's tough. I think he wasn't even approved at the Department of Defense for this application, right? Only XAI was, and they had lost. They had lost because Palantir picked Anthropic. They'd already lost last summer. They'd already lost this war. And he saw all of a sudden there was a break, which happens to every founder, right? You see, there are these moments in time when your competitor goes down for a week or screws up a key deal. And he did what most of us in B2B would do. He pounced on the deal. He immediately shot the email to the CEO. Rory Co. was down all weekend. I can have you up on our infrastructure on Monday.
I'm actually going to argue something that's going to sound naive. I actually think it wasn't just a pounce while the other guy is weak. It actually was a roughly trying to do the right thing. And actually, as I say, I think the odd thing is I think he was right on the merits, right? It's like, we should be willing to sign deals like this because the government should decide, but his labor is not going to consent to that, right?
I think it's just everything is accelerating in the capabilities of these models. Everything is accelerated since December, right? Everything's gotten better. So it's just very hard to predict for a military application what these models will be able to do in 12 months. It could literally be beyond what we could conceive these LLMs could do. And I'm not saying that that is a bad thing because there's bad actors in the world, but even understanding where it's all going to go, it's hard to predict.
Just to ask a political economy question, who should make those decisions on how to use this technology? A privately held company or someone elected pursuant to the Constitution of the United States of America with 80 million votes in a Congress? Who should make those decisions if they are quote unquote hard?
Well, it's tough. I mean, I don't want to spend all the time. It's tough because there's no good answer. We know the last thing we want is Ro Khanna or whoever the version is on the right making a hyper political decision. We don't want that. We don't want it politicized, right?
No, I disagree. We do want political. How do you think we make any fucking decisions? It's called a constitution for a reason. We elect. I don't
think most of our political leaders even understand how AI works. I don't think most of the folks in general, even on X, understand how it works. They don't understand.
Hard-nosed comment again. You're right.
Guys, there's logic and there's rationality. You're logically right, Rory, but Jason is rationally correct.
No, I disagree.
The majority of governments around the world are not sufficiently versed in artificial intelligence and deployment and evolution of it to make sound decisions. I think we would all agree on that.
I wouldn't. Look, by definition, if you're running the government, on any individual thing, experts know more, right? Your job is not to be the expert. Your job is to be able to manage the experts, right? And I think it's the same mistake, frankly, that folks made in COVID where they did defer to science. No, it's listen to science and make informed judgments. Now, you might argue that the people making those judgments at various times have been mediocre or even bad at judgments. But the way to solve that is to elect different people to make judgments. You can say, I don't trust the US government, so I don't want to deal with them. That's a totally rational thing to do up until the moment when they invoked the Defense Production Act, right? Totally rational. But what you cannot do is say, I'd like my $200 million, but I'd like to tell you what to do as well.
Just one interesting thing on the deal, just structurally, putting aside, and I know we can move on. I don't know it was being negotiated before it was being signed, right? By the nature of any big deal. So it was signed last summer. That means Anthropic was probably closer to $1 billion run rate and still trying to break it, because it was $1 billion in January of 2025. So signing a $200 million deal plus $200 million from Palantir pull through, okay, plus blocking your competitor from Palantir and others, that was probably a pretty big deal at the time. That was probably one where, like, he was honest that he swallowed some of his principles, like raising money from sovereign wealth countries. But it was so important to winning in the enterprise and building this cloud. It probably actually made more sense to take the risk at $1 billion-ish, right, than at 15 billion, where you're like, oh, everyone's gonna be like, you throw away the 400 with Palantir, okay, 200. Less of a tougher decision at $1 billion run rate. Like most of our portfolio companies, if they came in and said, we can grow an extra 40% this year if we sign a contract we'd kind of rather not sign, but it's totally legal. And Rory, instead of growing 60% this year and having no exit, we can grow 110%. I think most investors are going to say, take the deal, swallow your pride, right? And so it was a bigger deal at the time than it is today, I think, right?
Agreed. But I actually genuinely, now having been harsh, I'm going to compliment them. I don't think they did it. I don't think this happened because they needed the money then and they don't need the money now. I think, like often happens in life, a bunch of people drifted into a situation that nobody fully thought through. And then, you end up at this point, even though you didn't plan to be there. I think actually the relationship happened initially via Palantir. So they were selling to Palantir as one would. A great customer to sell to. Palantir sells to the government. You get dragged in. And you probably sit there thinking, well, they'll be reasonable. We'll go and talk to them about how we operate. I mean, the Wall Street Journal covered it today. Part of this, as is always the case, is personality clashes. You're like, oh, this is the way I look at the world. And this guy at the other side of the table looks at the world totally different.
Final thing on OpenAI, Anthropic, and then we will move off them. The ultimate deal maker that is Sam Altman closes $110 billion round, 4x the size of the largest IPO ever. I mean, Jesus, you got to give the man credit. I mean, what an absolute machine.
Totally.
Anything other than plaudits? Is there any money left in the world to fund these businesses? The 200 and 400 million in revenue seems relatively paltry compared to the $110 billion he just raised.
Yeah, I mean, there's some obviously they're not public. And obviously the benefits are inuring to a relatively modest amount of shareholders, right? All of that stuff. But it does make you wonder if we should even be talking about the IPO window or any of this crap. It doesn't even matter when OpenAI can raise $110 billion. Oh, we're all worried some B2B company can't IPO at $400 million, growing 40% at $3 billion. What difference does it? Like, it's so minuscule. I mean, it matters to the humans that work there, but it's not even relevant to the economy when OpenAI does 110. And they're going to do another one before they IPO, probably before they IPO if they can, right? Maybe not. It'll either be an IPO or another round like this, but it's a force of nature, right?
It's clearly a fortune, and it is astonishing. I mean, any way you cut it, it's like, when you add up venture dollars raised invested year to date, you kind of go 30 on Anthropic, 110 if you call it VC, is 140. It's more than US venture for all of last year. So these are astonishing numbers, right? I do wonder, and you're right, it's a very odd circumstance to have a private round be 4x the size of the largest IPO ever, right? And it does make you wonder how that IPO gets done, right? And we've talked about this before, right? And it's interesting, there's little nuances here. Amazon's, I think, 40 or 50 billion. Some of it's upfront, some of it's commensurate on either an IPO or AGI, which is just one of those weird things that some of their money only has to go in once the company either achieves AGI or goes public, right? Which to me, and Jason, you mentioned a while back, exudes a little bit of the IPO support coming in. In other words, is this really 15 million now and 35 million as kind of a placeholder for the book on the IPO or something?
There are also precedents of, NVIDIA investing 100 billion and then the kind of walk back of up to 100 billion. Is it that again? I'm genuinely confused.
No, it's not quite that, because NVIDIA talked about investing 100 billion. Remember, I printed out the press release, and then they ultimately invested 30 billion. So they, folded back slightly. Amazon came in for 50, but of that 50, it's not like it's a press release, it's actually a real commitment, but it's commitment on closing conditions that are either an IPO or AGI. So it's not money now, right? If you needed to pay your workers next week with that 35 billion, it wouldn't be there.
When does this go public?
You've got to believe that the next round for this, Anthropic and SpaceX, are all public offerings. Articulate who writes the next check privately and what the investment thesis is. I don't think there's more capital there. I could be wrong, but it's hard to imagine another round after this. So you just, therefore, by a process of elimination, at some point you got to go public. And the next round probably is a public round.
An important point on an asterisk that we have a double asterisk to. So it's a 110 billion round, but 50 billion from Amazon, of which only 15 billion is up front, right? The rest is AGI or IPO. But Amazon's own free cash flow has fallen to 11 billion a year, because it's spending so much. So we are literally, OpenAI had to go to Amazon, and they had to go to everybody on planet NVIDIA, and they're exhausting all, like Amazon doesn't even, it has the resources, but it does not have the free cash flow to fund its commit. Right. So it's not that could Amazon do 150 billion, 300 billion? I mean, there's a limit here where the folks that did this round literally cannot do anymore. Right. And this is probably why Jensen walked the 100 billion back, was there's a theoretical idea where it makes sense, but the world has changed. And that's a lot of free cash flow, even for NVIDIA, 100 billion. Right. So we're reaching their limits.
I know this is an absolutely stupid, probably suggestion. You can both fire me for it. Is there a Sam Altman premium? We've spoken about the Elon premium before. If Sam were to say, I don't want to do this anymore, is there a Sam Altman premium?
I don't think in the same way. His genius has been deal doing and the oomph and the chutzpah to raise 200 billion plus privately held. And he's obviously technical. He's a computer science degree from memory. I wouldn't swear to that, but Elon's genius at the margin has been the ability to pull off amazingly complex engineering projects sequentially. So I don't think there's the same premium there. And you could even to make it a little more pointed, as it were, against Elon just for a second. OpenAI trades at 700 billion pre this round, but that's because it's hyper growing at, I can't remember the growth from 12 billion last year, from 3 or 4 billion in GAAP revenue to 12 billion, 20 billion ARR run rate. It's 30 or 40 times revenues for hypergrowth. Astonishingly, I continue to point out, Tesla continues to trade at 10, 12, 13 times revenue for declining revenue, right? The Elon premium is way higher, relative to the performance of the underlying asset. You asked who's got the better premium, Elon or Sam? And actually, the easiest way to ask that question is to say to yourself, remove the person with the premium, right? Tesla trades at $1 trillion today. I think if Elon died tomorrow, it'd trade at $200 billion. OpenAI trades at $800 billion today. I think if Sam Altman died tomorrow morning, it would trade at $600 billion. They'd go, we better get someone else to run the thing. Brett Taylor would be in charge, right? And Brett Taylor would be great and he'd figure it all out and they'd build a company and go public. If Elon goes, who's going to make the robots and who's going to make the robotaxi? And if you don't make one of those two things, you've got a car company with a declining car product line, flat revenue growth in a tough market for electronic vehicles. You'd be down $800 billion.
I think that's fair.
Yeah, if Sam left, you buy Sierra for $80 billion, 10% of the value,
and you
buy out the shareholder. Whatever the math works, whoever gets what, you just do it overnight for $80 billion, and your problem is solved. And possibly the company's stronger afterwards, other than the fundraising. It might be better.
Yeah, agreed.
And if you have one of the greatest technical CEOs of our lifetimes in charge of it, instead of a very brilliant but ultimately non-technical founder. I mean, it's tough to beat Brett Taylor's background. And he's already on the board, right?
But fundamentally, Jason, you are right. Fundamentally, you'd be like, we're just going to build a company now. We're going to build ChatGPT. We're not going to have distractions. We're just going to be fine. You're exactly right.
I'm going to push you both before we move on. When does it go out and what price does it go out at?
I think there is now a subtle, unspoken rush to the money that is taking place between those three mega cap companies. Everyone else is kind of to a rounding out on the sideline until these deals get done. I personally would say the sooner the better for everyone, right? So I'd love them to go public as quick as can and get it over with. The question is not when they want to go public, because I think if they could all wave a magic wand by the end of this year, I think that all three of those companies would wave the wand and say, let's be public. It'll be safer.
I'm going to say October, and I'm going to say it's going to go out at 1.5 trillion.
For OpenAI. I think you can trade that in Polymer on some of these kind of tokenized bets. I mean, which probably should be something we should do.
It's a logical bet. They might actually seek initially a lower price to not stretch it for an IPO and then see what happens. The SpaceX IPO price that Elon is making up, 1.75 trillion. I mean, it's a crazy number, but it's not 2x the last round, right? So it may make sense to have a modest step up, but that's really just aesthetics. The market will settle. It would. I do think, thinking on it, and listen, I could be wrong on this one, but thinking on this live now, I do think there's risk that they've exhausted some pools of capital from the round trippers, the SoftBanks, the NVIDIAs, and now Amazon. Like a lot of that money, the fact that so much of the money of Amazon isn't in the bank today, to me, it doesn't count. Like maybe it sets the IPO up, to Rory's point. Like that's great to set up, to have 35 billion of your IPO pre-sold. Like that does make the IPO easier. Like let's be clear, like that it's a gift walking in and have half your book sold. But if they've exhausted the money, then yeah, they should go public in October. I think it's right.
Just to comment on the valuations. I mean, I'm not in the, it'll be fine at 1.5. I think those are such huge numbers that they're very much predicated on the overall market continuing extremely strong. I mean, S&P, despite all the noise within the system and all the SaaS apocalypse, S&P is plus or minus 2% from an all-time high and trading at a 20-year high in terms of any kind of trailing KPE basis. So this is selling securities at a time when people are hot to trot and buy securities. So getting it done in today's market, who the hell knows how it gets done? It could easily get done at an incredible price. But it is worth pausing and just looking at the vast distance between the valuation on any kind of fundamentals basis and the amount of leaning into the future you have to do to get to those kind of valuations. And it's kind of slightly different between them because OpenAI it's growing fast, really fast. Provided it continues to grow really fast for 2 or 3 more years, it all works. So you can pay, 40, 50 times revenues. I mean, the fact that I even said that sentence at scale is how that one happens. And if there's an appetite to pay 40 or 50 times revenues at that point in time, you can do it. SpaceX is even harder because you're basically having to underwrite a fair slug of next generation technical risk. Admittedly, you're underwriting it with the person who in the last 20 years has proven most able to deliver that technical risk. But you've got the whole Starship risk, and then you've got the next generation Starlink 2.0 direct to cellular risk, and then you got the data centers and space risk. And you need all that TAM because the existing business is 18 billion growing 20%. So it's not obvious that it's worth 100 times trailing revenues for 20%. If that was a SaaS company doing 18 billion, growing at 20% with modest profitability, Jason would be sneering and saying 5 times.
I wouldn't be sneering. I'd be saying 5 times.
Yeah, you would be. Yeah. And the difference between...
I'd be lamenting it. Like, I'd have my head in my hands, but I would not be sneering. I'd be commiserating. I'd be like, could I just go back to December 2025, please? Could I just roll back time, just a heartbeat, just till at the end of last year?
The eternal, oh my God, if I'd known that what I know now, I'd have sold everything. But yeah, but you're right, Jason. And it's a big gap between that and 1.7 trillion. And that's all about Elon.
You said if it was a public company doing, 18 at 20%. Jason, before we started recording, you said something and I wrote it down. You said you thought every public company would miss their numbers. Can you just...
I think all the publics, I mean, I don't mean to be negative. I think almost all the public software companies are just going to do worse and worse for the rest of this year. I think, Mongo was down, the largest drop ever after a strong quarter because they said they were going to growth will drop back to the teens, right? Even though they crushed their quarter. You had Iran from Monday on the other 20 VC this week, who was great, but the public markets think that they're going to keep re-rating growth lower and lower each quarter. I just don't see any positives for the existing group of B2Bs. And Rory's point is we just need more good ones in to raise up the median and the numbers. And maybe it's that simple, but I actually think we got the SaaS apocalypse all wrong. I think that it's not vibe coding that's killing us. It's just everybody has lost the way to growth. And I think because of NRR, because of revenue retention, because so many of these numbers are backwards looking, I think almost everyone is worse than it looks. It's funny. I wrote it up this week. You could expand the basket very widely, but for the stocks that I follow, the most successful one is DigitalOcean. DigitalOcean's up 28% this year. DigitalOcean had all these years to $1 billion in cloud revenue. Like, in some ways very impressive to $1 billion, right? But in their hand, it's pretty good business to only be doing $1 billion, right? You could be critical, but you need to be radically accelerating growth and profitability at the same time. And you're looking at these public guys and you're like, who the hell is going to radically reaccelerate growth? Who the hell? And that's why when I have to come up with my 4 to bet on, I could only find 3. Like, I'm still going to do 4, but I could only find 3 because I can make the case that this one's undervalued and that the markets don't see the inherent value but the markets are saying you guys got to reaccelerate, and they're all going to deaccelerate. And so I just think almost all of these public B2B companies are in worse shape than they look. And while I wish we didn't have the SaaS apocalypse, man, I think it's worse than vibe coding. I think vibe coding is one of the most minor threats to software companies in our lifetimes. And I vibe code constantly. It's a minor threat. And that's why they all have to cut half their teams, to our conversation last week. I sounded so pressing. What are you going to do when for the next 2 quarters you may even make the quarter, but you keep having to drop your earnings estimate and rate down? At some point over the course of the year, you're just going to have to cut half your team because otherwise you can't make the math work.
I want to talk about the team, but before I just want to put one caveat out there, right? You do have to take price into account, right? And let me tell you what I mean by that. Yeah, Mongo had a very strong quarter, modest delta in terms of future guidance versus expectations, dropped 25%. Why? Answer, it was trading at 40 times next year's EBITDA. When you're trading at a super high price, 8 or 9 times GAAP revenue, right? When you're trading at a super high price and you go from 30% growth to even, I think the guidance is 23, 24, clearly assumption would be 24, 25 would be actual result. When you're trading at 40 times EBITDA, it doesn't take a lot to knock you off your pedestal, right? Conversely, a whole bunch of these things are now trading at 7, 8, and 9 times next year's EBITDA, where even 8, 10, 12% growth can probably make it at the very least highly unlikely to decline by 30%, and arguably more upside than downside. Right.
So why will they reaccelerate? I just don't believe these.
I didn't say they reaccelerate, Jason. I think there's 2 separate things. Yeah. And it gets to your block comment. You've got to do one of 2 things. I do agree you're right about you got to do one of 2 things. If you reaccelerate enough, then they'll cut you slack on EBITDA, on profitability, provided you have some either profits or convergence on profits. If you don't reaccelerate, then you're right. All you're selling is a profitability story. And then we're going to segue straight to block. The only way to do that is to look at your cost structure and say, I hate the rule of 40, but let's put it out there. If my revenue growth is 10%, I can subtract 10 from 40 and I come up with 30% free cash flow required. So you're right. You start running the math.
It's just brutal because there's been the amount of spend that has gone to cloud and LLMs is like nothing we've ever seen before. And if you're a public software company, you've captured none of that. It's a disaster. Like it's a Titanic. It's worse than it looks because you can't figure out any way to take all of that spend and turn it into an agent, an LLM that your 10,000, 50,000, 100,000 customers want to pay you more for. I mean, it is the biggest fail and own goal in our history, and it's going to get worse. There's so many public folks who we're rolling out a beta, or we've added a Claude connector this week, and it's a disaster at this point in 2026. It is, and you can see it when a lot of these public company CEOs speak. They don't have like I was on the earnings call with Mark Benioff. He's got the confidence. He believes that there will be a lift from Agentforce. Growth already, now some of it is inorganic. Growth is up, and he believes he has a performing agent. I was there in the building. The dude believes. Okay,
yeah, no, I hear you.
But I can smell the lack of belief in other public. I know Harry can too. When he interviews him, you can just smell it out of the pores. And as a human being, I have empathy. But good God, that's why I think it's all because of retention. It's all worse than it looks. It's all worse than it looks because you can hide under multi-year contracts and annual contracts and price increases. You had so much time. Like these 3 kids from Stanford that figured out how to use Opus. Why couldn't you? It's out there. It's not even that expensive. Why can't you figure out how to use Opus? Why can't you put your 20 best engineers and just friggin' clone Harvey or 11 Labs or Lovable? How hard is it to clone those apps, guys? You all deserve to be fired.
Hang on. I thought Owen at Intercom had a really great piece just this week on, what it took to get to take his existing business, gut it and build Finn on top of it. And that's what I meant when I said, Jason, it's hard. Not from a technical perspective, that's part of it, but just from a fortitude to make all those changes, to put all your bet on the new thing. There was probably a year of feeling ridiculous because you're talking about the small thing and the big thing is so much. Customers are saying, why aren't you focused on the big thing? And he just described very well what it took to be bloody-minded enough to make that happen. And you're right, Jason. I do think you are correct. That's the kind of attitude that the opportunity is there, and I'm interested to hear your take on Agentforce either this week or next week or whenever, but that's the kind of bloody-mindedness it's going to take to push through. I think more
you do need it, and I just don't see it. I just don't see it across startups, and I don't see it in the public companies. I don't see, and Owen's been, and now listen, Owen had to come back as CEO. There's complexity there too, right? But he's been brutal that this is a founder market and it's hard. And yes, it was harder for them because they had an institutional base he had to partially retain, but also partially abandon. A lot of complexity, but woe is me. Like his points were all really good, but you know what? Maybe he got there a quarter or two earlier than others because it was in CX and support. Okay, so he could see the change earlier than everybody. It wasn't just going all in. It was that also he was in one of the 2 categories that changed the most quickly, right? But what about the rest of the world? You've had time. You can go out there and say on Twitter, LLMs are fungible and that systems of record should benefit because we own what matters and LLMs are commodity. I mean, give me a break. Where's your hunt? Show me 100 million. Show me 200 million. Show me 500 million. You've had 16 months now.
I think Toby at Shopify is one of the most brilliant CEOs and technical minds. I think Gustav at Spotify is too. I'm genuinely naive here. Are you telling me they've missed a beat as CEOs?
No, Toby is dragging his company mercilessly into the agentic era, rolling out their agentic commerce. I don't know how successful it will be, but it'll be front and center of Shopify, right? It's becoming front of center. So, but he feels to me roughly at the pace of Salesforce. He probably should be faster, right? Because it's a more agile organization, but they're dragging their companies with real product into the future. And I think everyone else, they're already starting to fall into the event horizon. into a state of terminal decline, that their teams don't want to do the work, and that they don't have the ideas. They don't have the ideas. Oh, Jason, I rolled out AI SDRs. Great, but you're a software company. Where's your agent? Where's your agent that goes out and does all the work for your customer base, right? They're just headed in the event horizon, and they're trying to put on the jets, but it's getting tougher each day to recover. Yeah.
Well, Rory, we're going to do a Christmas party, the three of us, and Jason's our bringer-upper. Yeah, he's the mood.
Yeah, he's going to be the fluffer-upper.
Listen, if you're really in the game, no, seriously, if you are in the game, I will be your biggest interrupter. I will use your product. I will support your product. I will say it's great. That's why, honestly, for a long time, to no benefit of, that's why I was so supportive of Agentforce, because we started using it and it works. So I'm like, I'm going to take this example, and it is not perfect. Like, I can tell you all about it more than almost, I don't think there's that many people that use 10 different GTM agents, including Agentforce. We might be N of one, and I can tell you the flaws and the issues and the challenges, but at least they're in the game. Armies of FDEs, armies of folks deploying custom agents, and it will get better. And I will tell you, it is still changing. Agentforce is constantly changing. It is not static. But like a real AI company, it gets better every month or two. It keeps getting better and better and better, like our AI tools are, rather than be sticking in beta. So I'm not saying Salesforce is going to turn into 50% growth next year, but I want to see this or better from anyone in software. You got to be doing as good or better than Salesforce. I think you're hopeless. You're hopeless. Oh, our industry doesn't really like AI. Oh, well, good luck to you. Good luck to you. I will bring the holiday cheer.
I mean, I just want to reiterate my position in the boring middle here, which is, I think the strawman of these public company CEOs are ignoring it totally. It isn't really true or fair. I think that, yeah, I do believe that most of these SaaS companies, I don't think they evaporate or go away. I think provided they get with the program, depending on the industry and market, there's a market where you've got plenty of time where AI is not going to be wildly disruptive from a top line perspective. I'll talk about OpEx next, all the way to where it's obviously disruptive. I think it's well within the capabilities of highly compensated executives who have their ass on the line to figure this out. Most of the companies that already have scale should not be vanished from this, which is a different statement than saying they will ever regain their 20, 30x EBITDA multiples, still less, God forgive us, 20x revenue multiples, which they got in 2021.
Here's the thing that I don't understand about the SaaS apocalypse, but this is what I think makes these companies terminal. Okay. What happened through December 2025 is basically the public markets said, listen, we're actually going to give you a growth premium for ever lower growth. Like the top tier in 2025 was, if you grew 30% or higher, you were, I think on average, valued at 25 times revenues. Okay. And this held even each year through 2024, our growth slowed. And the markets were like, for whatever reason, the markets would say, listen, it's cool. As long as we will ratchet down what we expect from public software companies. We'll ratchet. And then at some point in January, the market said, no longer will we ascribe high growth premiums. And it came out of a shot in the blue. And this is why everyone is still stunned now, because it worked. This deceleration, but multiples staying strong. If you were in the top quartile, it worked for 3 years. 2022, 23, 24, and 25.
On the facts, not the stunned, because you're right. Zooming out 20 years.
I see them stunned. I think Harry sees them stunned too.
But then they just didn't look at the chart, right? If you look at the chart, it's really simple.
No, it's your stock price fell.
Hang on, stop. But for what I agree with you on the conclusion, where you were at, right, is there was 15 or 16 years of the bucket growing at an average of 30%, valued at an average of 6 times revenues. Then there was 2 years of COVID, bucket growing 40%, average of 20 times revenues. And then you're exactly right. What happened is we deaccelerated not just back to 30%, but down to 15. And then the market said something stupid like, well, we're back to 6 times revenues. It's okay, like it used to be. And you're right, Jason, it was wrong. It was 6 times. Once upon a time, you were 6 times revenues and growing at 30%. Now you're at 6 times revenues growing at 15. And you sat there for 2 years where it was like, when you do a chart that just shows revenue multiples over time, it's a stupid chart because it looked like it had gone back to normal. But you're right, Jason, the growth had gone out the bottom. And then all that happened last year is people's eyes were opened and they were like, it's not a temporary growth decline because of X, Y, or Z. It's now permanent because of AI. Oh my God, what are we thinking? You should be at 4 times. That's the movie.
It's now permanent because of AI. That's a really interesting statement. We obviously saw, following Jason's statement, I don't know if Jack was listening. I'd like to think that he is, and took Jason's guidance as instructions, and announced obviously laying off 40%. It's kind of all under the hood of AI efficiency improvement. Is it truly that, or is it a very bloated organization that needed resizing? Jack's continuously overstaffed his companies, and it was just a resizing with a mask of AI.
Jason, you should go first because you called this last week. Didn't name the company, but you called the catastrophe.
Well, look, I think people missed on Block in particular. I know their profitability was way up, but I think their top line is only growing like 3%, something like that, right? So this story everyone missed this. Everyone got suckered in by the press release that said profit per share, gross profit was up 27%. Okay, and that's true, but you only lead with that when you're not growing. Right? When you're growing, you lead with revenue growth, right? So what are you going to do? I think this story is simpler than it looks. Jack, they're growing 3% and he's given up on return. This is my point. He's completely given up on returning to growth, which I think most public software companies will get to during the course of this year. They will give up. The CEOs will give up. This is my point. They will give up on returning to growth. They will give up. And he gave up. And what's your next play? You got to get more profitable, right? There's a limit where it's not worth, like more than 50% operating margins isn't worth it unless you're an IP licensing shop, right? But it's get it done, because I got to get to my next state, which is hyper profitable. And so my only point is people reacted to this like this was a high growth tech company. It has been many years, or at least years, since it's been a high growth tech company. 3% is pretty tough. I mean, a SaaS company at least can raise prices 4%. At least we have that in SaaS. We just go out to our customers due to the incredible features we've added this year, including changing the colors of our buttons. We're raising prices 6% this year.
Totally. So I think there's a lot in that. And first of all, I big picture agree. A mid-20s billion dollar revenue company, 10% growth a year ago, down to almost no growth last year. You've given up on the revenue growth, so there's only one button to press. You're exactly right if you want to make the stock go up. So a couple of comments though. One is on employee count. You're right, it had ballooned up. There'd been a couple of years where it growing 50%. And you've got to calibrate that because interestingly, if you look at revenue per employee or gross margin per employee, compared to SaaS companies, it actually wasn't that far off. But of course, it's not a SaaS company. It's a financial services company. And when you look at it on that basis, where obviously revenue, you have all these interchange and pass-through costs, you are relative to best-in-class financial services companies, there was clearly fat to cut there. And that's why, and Jason, you're exactly right, that's why they did it. But talking about AI, let me use the AI word, and there's 2 separate uses of the word AI, right? Are you talking about AI on your top line or just AI on your OpEx? And it's worth pointing out here, this is not an AI top line story, right? Salesforce is an AI top line story. AI is either going to increase your top line if you deliver Agentforce, or it's going to reduce your top line if someone else delivers Agentforce and you don't. It's an AI top line story, right? This is not an AI top-line story. I'm not going to use more at the margin, maybe a little. I'm not going to say no, but because Jason will correct me like he did entirely correctly on YouTube. But it's Cash App at the margin, or buy now, pay later, or Square. AI is not going to fundamentally change the top-line offering here. So this is not an AI positive or negative transformation story. All they're saying when they use the word AI is they're saying, dude, we don't make or sell AI to our customers, but maybe we can use AI to cut some OpEx, right? Is that true or not? I doubt it's true at the 40% level. So when you look at it at that basis, it's not a growth story. It's not an AI growth story. It's we need to make the profits go up and therefore cut all these expenses and plan/hope that some combination of people working harder and AI can allow me to service the customers at a much lower headcount. Entirely, yeah, and get the stock up 20%. The other thing, Jason, you're right, is it is implicitly an abandonment of revenue growth as the plan out of here, at least in the short term.
Yeah, I'm not saying that this doesn't give folks cover to make similar cuts, and I'm also not saying AI is exaggerated as the root cause, but this isn't quite the play people think it is. When growth is decelerated to 10 to 3, I mean, it's you're in a tough spot, and And I just think where it may inform other CEOs is folks in the mid to low teens may adopt this. That they may throw in the towel, not at 3% growth, but at 12 or 13% growth. If there's no if by the end of this year they're like, you know what, this AI is such a force of nature, but I haven't found a path to acceleration by the end of this year, you may see people copy it just for that reason because they're out of ideas.
And I want to ask a question to you, Jason, and I'm going to deliberately do it in a way to separate two things, AI on the top line and AI on OpEx. Let's assume there's no AI impact on the top line. It's some financial services business that just has no AI revenue lift, right?
Yeah.
And let's assume they're efficient beforehand, which I think Block wasn't, right? You could definitely argue there was some. What's your mental model of, if I have 100 people doing X, doing whatever revenue this year, how many per year do you think a well-run company should be trimming based on AI? Do you have a mental model for that? Because I doubt it's 40 in 1 year. What's your mental model?
Well, look, just one thing first, then I'll answer the question directly. I do think that even if you don't think that a company like Block is threatened by AI, I'm not saying it's like YouTube, but here's the thing I know, even just from my own portfolio, folks are building agentic applications that do what Block and others do, and therefore are displacing them because that's where the energy is. There's a lot of products at Block, right? There's a lot of products. But if you go back to some of the more simplistic products like Square, right? As agentic products process point of sale and other transactions and add more value, you can lose, even if you say the atomic version of my product doesn't really need AI. It doesn't. But when these agents are doing everything in your industry, so I think the agents are capturing so much value that there is just limited budget in every space, and they're going to take budget away from you. So I don't think even folks that are immune, I don't think are immune because the new entrants will find ways to tap into that budget and add more value. In terms of cutting the team, honestly, Rory, I think everyone thinks 40% of their team they don't need today. Every single CEO I talk to doesn't think they need 40% of their team. And so I think that the Block number will become the default. I don't need 40%. It's a gift.
I got in a bit of trouble, but I tweeted over the weekend because I spoke to 3 CEOs between 500 and 1,000 people, and all 3 said to me that they were cutting by a minimum of 20%. And I think this does create more acceptability around layoffs.
Yeah, it's the Overton window argument.
Yeah,
I was
now's the time.
I was stunned to learn that in recent memory, this was the largest percentage headcount cut. I saw a bunch of data on that where, there's a few 15 or 20% cuts that were bigger because when someone like Amazon cuts 15 or 20%, it can be 30 or 40,000 people. And this was, I think, from 10,000 to 6,000. No, from 14 to 10,000, I think.
No, it was 10,000 to 6,000.
10,000 to 6,000, you're exactly right. I've been looking at the before and after headcount numbers. Because obviously, look, in venture-backed deals, there are occasional horrible moments when you cut by 50 or 60%, but that's typically when you have 40 people and you lose product market fit. This is the biggest percentage change for a publicly held tech company in the last 20 years, which is just an astonishing statistic. So I think, Jason, to your point, it definitely expands the Overton window of what's doable if it works.
Well, let me give me just a simple example for fun. So I was helping a very hot AI company think about growing their GTM team. We get called into this stuff all the time now, right? And they're going from 10 folks in sales last year to 250 this year. Okay. Let me just ask you, how many of them you think are going to be great? Great.
20.
20 out of the 250? Yeah, maybe a few more.
20,
so look, a few years down the road, if you have to cut, this is going to be so easy. I mean, I know the human impacts are horrible, but I can't think of any company I've ever worked with north of 500 people where 80% of the people were great. It's just managers of managers. It doesn't matter in the age of AI. Now, what's changing is companies are going to be permanently smaller to start. That is utterly changed. And that's why in some ways, Block is a window to the past. It's like looking out to the galaxies out in the sky, because I don't think we'll build, for the most part, companies like Block the same way today. We may stumble into them in times of plenty, like them going from 10 to 250 in sales in 1 year. But when you get that bloated, I know we all want to say we don't lower the bar, but managers of managers always lower the bar. First-time managers always lower the bar. It always becomes headcount driven and hegemony driven. And 40% of these people, we just have even in AI companies, have no idea what they're doing. They don't even know what my team, 500, 800 people. What are they 28 people doing in marketing again? They don't know.
Yeah, it's funny because whenever you are like this extreme, I always want to argue with you because you're so extreme on it. But sometimes I find myself realizing that you're correct, right? I mean, because I was just reflecting on this, like, going back to capital versus labor. In the 1950s, 1960s, the biggest companies were 300,000-400,000 employees, like General Motors, like Walmart had $1 billion at one point in time. The amazing thing now is Apple has 160,000. Google has 190,000. The trend says you're right, because even before AI, the valuable companies have been the high IP, low headcount people. And you look at the trend today, you look at the revenue per employee at someone like a Cursor, it's about the same already as Apple, maybe even a little higher than Apple. Apple's about 2.6 million revenue per employee. Google is 2.1. So these guys are already at that level at a much smaller scale. So I don't know if it's as extreme as you say, but the trend is definitely proving you right, which is more and more valuable companies with less and less people. I don't think it trends to one. I don't think it trends to the billion-dollar single-person company, but the direction of travel is on your side of the table.
I do think we'll see an acceleration of layoffs, though, with founders appreciating this kind of acceptability of doing large layoffs in the wake of this. That's what I hear.
I always hate the word acceptable. I think the harsher comment is necessity. In other words, acceptability sounds like it's a social thing. I wouldn't like to get rid of people's career just because it suddenly, quote, became acceptable. If you are subscale, growing sub 10 and kicking off 10%, if you don't take the actions and someone else, remember, price clears all markets, as I repeat myself over and over again. If you're only doing 10%, less than 10% revenue growth and 10% free cash flow, you'll be trading at 4 or 5 times and 3 or 4 times perhaps, and someone will know how to come in and buy you and make those changes, and then a month later they'll be worth 8 times.
I think you do have a choice. I think Harry's point's an important one. And I don't even think it even matters at some level because it's the past, but I think the block thing frees CEOs to make what they believe is the right decision for the company without overanalyzing the horrific human impacts. They are now free to sit in the board meeting next week, probably. These meetings will probably all happen in March. And they'll be like, guys, let's just talk about block calmly. I'm not saying we should do this. But given that we missed the quarter again for the 4th quarter in a row, guys, you said we were coming back, and I get it, but we're at 110 million in revenue we missed, or whatever, 400, we missed the 4th quarter in the row. What could we do like block? It's at least going to be a conversation, right?
I think also the extent allows them to cut deeper. The 40% is a big number, and I think it allows them to go
but it's also these companies are in the past. I think the future companies are just not going to hire this way. And the weird thing to think about, there's a chance we look back at 20 years of brute forcing revenue growth with sales, human-led sales and marketing as an anomaly in the era of software. In the old days of software, when I was a kid, software was wildly profitable, right? And then for 2 decades, B2B software grew like nobody knew until AI, but it was never really profitable. And we may look back and it's just jaw-dropping in the efficiency of AI leaders, and we may just not go back to that old era. We may not go back, and we may also say, listen, we may double or triple sales quotas for traditional software companies, and just let the chips fall where they may. Just let them fall where they may. Like, I'm not going to do the 400K quotas anymore that you wanted, the 500K. I'm done.
Yeah.
Why don't we talk about one of the future companies that we mentioned on the revenue headcount? Because I'm confused, chaps. I speak to everyone about their product teams and their engineering teams, and everyone has moved off Cursor and moved to Claude Code. I tweeted about this the other day, and thousands of people comment this, and everyone is in universal. Cursor's dead, Claude Code rules all. And then Cursor announces their movement from $1 billion to $2 billion in revenue in 3 months. Rumors of secondary round being done at 50 billion. Maybe in my favorite saying that Rory often said about Benchmark, reports of my death have been greatly exaggerated. And I thought of that here. What the?
Well, just one comment. Maybe Rory has deeper insights second. I will say it's funny because this is one of those situations clearly where VCs judging the world based on their portfolio versus the real world are out of sync. Okay. Literally right before this all came out and blew up, I had 2 board meetings of my fastest growing portfolio companies. One of it, and they all joked about how folks weren't using Cursor. And one said, but mostly it's only grandpas at the company that still use it. And the CTO stood up, who's pretty young, and said, "Grandpa over here, I still enjoy it." And he's like, "There's a couple of us that still use Cursor." And then I was with another company that has blown up all of their AI, and there were 2 people that used Cursor. So you heard these stories all the time, and you just assumed that everyone had mainly moved to Claude Code directly, right? And product teams had too, and you just assumed that's the way the rest of the world works. And that's why Cursor was smart to slip this the news release to Bloomberg that they'd happened to double in the last 90 days. So our portfolios are not representative. I think listen, this is as much as I know, other than we all made the same jump to the conclusion based on our 40 portfolio companies. But if they said 60% of our revenue is enterprise, and probably the answer is right there, right? Is that this is a trusted tool with a lot of things, including guardrails that can manage agentic swarms and others. They're pointing out how banks use them and other conservative enterprises and are just rolling them out. And I don't know this to be true, but if Cursor is the more conservative choice, that's not the worst place in the world to be, especially if you can pick your model. Maybe that's the answer, but it's not my 5 fastest growing investments. That's not where they're crushing it today versus 6 months ago. But it's so funny. We got it wrong. Like, numbers don't lie.
The feedback that I got from the tweet was very simple from insiders. It was twofold. It was one, that you have enterprise crushing it, exactly as you said. And then 2, actually just annual subscriptions and their cycles not being complete yet. And so there will be a wave of unsubscriptions, and that churn will be real on the consumer side.
But that can't, Rory's the expert here, but that even if that's true, and it's a really interesting topic in general, we should, maybe it's worth talking about. You don't go from 1 to 2 billion in 90 days if you're having massive churn, like deferred churn at the end of the contract. That's a different issue that's going to come down the road. I mean, that is growth that is just massive market pull. Like epic market pull to grow that quickly, right? Just to sign the deals takes so much energy.
And that's exactly. And I think the lesson is never underestimate big markets and momentum, right? You know, if you come into last year with the momentum they had, or the middle of last year, even if things are slowing at the margin, even if at the marginal startup you're losing to Claude Code. You've built your name, you've built your brand. Every enterprise is trying to adopt coding. The adoption cycle there isn't, I tried Cursor yesterday, I'm going to try Claude Code tomorrow. It's like corporate's got to approve, purchase orders got to be raised. We got to have security review it. Legal's reviewed the contract. We signed a deal. You're not going to run in next day and say, we should switch to Claude now. It's like, no, we're going to use this for the year. We'll do an eval mid-year and we'll think about it next year. I mean, Jason knows better than me. The big aha here is when you're in a great big market with a massive trend of adoption in the course of 2-3 years. If you've got your share of that, you're going to do just fine. I mean, at the margin, are you probably losing share relative to Claude, at least in the last 3 months since the last set of models? Probably, but it still means a big outcome. I mean, we talked about this 2 or 3 months back. It's clear that they're going to be one of the 2 or 3 players at scale. And scale gives you a lot here. I would add, you're right, Harry, numbers don't lie, but I haven't seen the numbers, right? And I haven't seen the revenue and I haven't seen the gross margin. But, you can easily see how someone with an early lead would be able to maintain that lead, even when, you got a super credible competitor who can bundle a product into an adjacency, taking some of that space, because the market's expanding enough to cover a multitude of sins. The knife fight, maybe this is the real sentence, Harry. The knife fight doesn't start until the TAM is like 60, 70% saturated, which, by the way, happened to SaaS in 2021. And that's when the knife fight started, right? Suddenly you're like, 1 in 2 of every new customer is a switch. Now it's time to kill the other guy. Until then, let's all grow one big happy family. We all have a win rate of 60%. We don't compete against each other. All those happy things that you hear in the board when the market is so big that we're not overlapping. Once things get saturated, then it gets uglier.
Yeah, I think there was a tweet. I think there was a quote or something from someone at Cursor. I might be wrong who said it, but I think it's an interesting point, which is that Barclays had just rolled them out. Okay, that was the first agentic coding product that was approved at Barclays. Okay, and banks are a big deal because they have the biggest budgets, but they are conservative at the same time. It's an odd dichotomy, right? They're super aggressive and super conservative. And, you know, we might have gotten Cursor wrong. I mean, Cursor is more enterprise. You can run it without data retention. You have full SSO. You have role-based access controls and all these things that you just got to build in the enterprise, the right audit logs, the right hooks. And to a CISO or CIO, as long as the product works, that could be 10 times more important than what someone in the other building wants. Okay. And I think and the other thing that's happening right now, good God, is, you know, it's been in all of these products for a while, but in Claude 4 Opus, these swarms of agents got really good. Okay, these swarms of autonomous agents. And Michael from Cursor wrote this. Not only did they leak the 2 billion, but he wrote a post, which, a tweet article, which seemed kind of weird, but talking about how the whole future of Cursor is sort of safely managing these autonomous agents. Not, the early days were clicking tab to finish a line of code, which was what Codium and Windsurf got going with. And and when you have swarms of autonomous agents, good God, they're not totally safe. Not much as we all love our open clause, they're not totally safe. And the more of them you have that are autonomous, and the more they can touch your data, they're not safe. And so if Cursor can do both, if it can unlock the power of swarms of autonomous agents running in real time, running concurrently, and make it safer, I would gotta think 95% of CISOs want that one. And in a lot of conservative organizations, the cranky CTO doesn't get to make all the decisions like at our startups. At our startups, the CTO decides, what the team's going to use, right? But good God, at a bank, what if you repeatedly leak everybody's confidential data? I mean, it's exhausting to have to go through that. This is not a joke. Like, every agent will leak data if it's allowed to. Like, every single agent will. That's how goal seeking works. Being the most enterprise leader in these mature spaces, you can win, because 99% of the world is not like us.
No, by the way, that's
Barclays is not like us.
Jason, sold. I mean, all you have to do is look at Azure's market share in cloud, where for 20 years, the value proposition, having said in millions of not millions, but tens of board meetings where we've talked about, we're running on AWS, should we run on Azure? Our customers want to run on Azure. And the value proposition of Azure for 20 years was it's not as good, but it's getting there. And Microsoft have great relationships with every CTO, so it'll be fine. You're exactly right. There's a large amount of software selling that can be done on the basis of safety and integration and selling all those boring bits. What you're dealing with is a massive market where everyone's making adoption decisions in an extraordinarily short period of time. And let me repeat what I said earlier, is they're both going to crank as fast as they can. They're going to, and as people make initial decisions and more of that market has an initial buy decision made, you're going to start running into each other. Is that going to be later? The competition is just going to intensify. Let's just do it. If Cursor went from 1 to 2, I think in the same period this year, I saw some Anthropic statement about, we've added $2 billion in ARR year to date. So both of them are exploding. This is the biggest freaking market, and those are the two most viable players in it.
Look, it's going back to last week. It's the Fortnite effect. Like, code will keep doing more, and Cursor has to keep ahead. That's the job, right? Apparently 60 to 70% of Cursor model calls are still using Anthropic's API. Okay. So even of that 2 billion, a lot is flowing back through to mom and dad. This is the point Michael Cannon-Brooks made the other day. And Claude, even if they may not even care about Cursor as a team, but they will inherently build all these features as an enterprise play. And so the bubble will shrink, and then Cursor just has to do more. And what we've learned this week is they've kept ahead. They have kept ahead of the Fortnite storm. And every CEO out there crying and saying how hard it is, and that hasn't kept ahead, they're going to be, that Fortnite storm's going to shrink to a pixel, and they're going to die.
Jason, I think you're right. That is the soundbite. I mean, the correct response to that is congratulations in the great race for what looks like a $50 to $100 billion minimum coding prize. You have conquered level 3. Which means unlike a whole bunch of people who are stuck in a back in level 2, you now get to go to level 4 and play again, right? It turns out it's hard to make $100 billion But they deserve all the credit for, being the early winner, cranking and keeping revving the story. I mean, it also just, again, back to the swarms of agents, it's just worth stating. And again, this is obvious, but just to say it, if you look at the Cursor story, I mean, he spelled it out in that kind of post, which I thought was very good. If you're not, this is back to Jason's point, if your story is not changing significantly every 6 to 9 months, you are probably falling behind. In fact, not probably, you are falling behind. You were autocomplete. Then you were an IDA. Now you're agents. Now you're swarms of agents. These models are moving so quickly, that the technology is moving so quickly, that if you think you can rest on every 6 months, you get to the prize for winning is to reinvent the company from scratch and the product from scratch every 6 to 9 months. Congratulations, it's a fun game. But the prizes are great.
The one thing I'd still love to know about Cursor, and it is incredible, the growth is, and not to be very 2025 about it, but the Claude API is expensive. I've measured our API calls. It's so much cheaper to run something inside of Claude. My God. So I'm on Claude Max. Amelia runs out of credits using Claude Desktop and everything, or she runs out of time. She doesn't even run out of credits. But what I get for $100 a month, and then I track what some of our API calls cost. And for a good prompt, a good call, it can be well over $1. Okay. And maybe for code, it could be more. That adds up really quickly. And it is, whether you think it is subsidized, whether you think Anthropic is subsidizing its own native use or not, their margins are strong. It doesn't really matter. So that is still the more hooray, you hit the top line. But when you're still paying probably I can't imagine Anthropic is so desperate for Cursor's business, they're giving them a massive discount, right? Harry may find that out through his network, but if they're paying close to rack rates, which I think they are, because they also say you can bring your key with you. If it's cheaper, bring your own API key with you. It says there's not much of a discount. That remains you're at Anthropic's whim because they're already subsidizing their own product.
Totally.
We're lucky people are not that, no matter what anybody says, we're not that price sensitive today.
Yeah. It was super interesting. I got to give a shout out to Tomash, who we had on here a few months back, did an interesting post just today as, basically, would you buy, I can't remember, it's a good metaphor, I should remember and I can. Basically, just looking at the pricing of, top of the line frontier models versus 6-month-old open source Chinese open source models and, the 10, 15, 20x difference in cost per token. It was a good piece. And you're right now people are paying full rack rate for the new stuff because the new stuff is so great. But if the pace of his point he was making is it's only 6 months from so new that it's amazing to, oh my God, you can get it open source for $120 at the price. And it just really, again, brings home pace of change and the need to be on top of it.
I think OpenClaw confused things, but the power of running swarms of agents autonomously to build software, the rate of change, we think the rate of change is I know you didn't literally mean it, but the way you described Tomas's thing suggested change might be slowing down, right? And we might get a benefit of these cheaper models. I know you didn't suggest it, but there was a hint of it. I think it's going to radically accelerate this year. Can
you help me understand why, Jason? Because I actually don't.
Because what changed in December, listen, I've been on Replit, not to talk about forever about Replit and Lovable, but I've been on it since June. And when I started, you couldn't finish anything. You'd ask Replit or Lovable to build an app. You remember in the early days, Harry, and you'd get a lot of buttons that didn't work. Okay, nothing worked. They'd be fake buttons. Everything was fake, right? And then it got better and better. And then by December, especially with Opus 4.5, all of a sudden it could fit. It wasn't just you could have a code for hours, whatever. That doesn't really matter for a lot of use cases. It could finish apps that worked. Really worked, right? And then on our team, Amelia took it over and she built an entire AI VP of marketing that is better than anything on the market. And she finished it without any drama. It took work, but she just completed it. It's in production every day, doing all of our marketing, not just execution, but it has all the ideas. It's like Hal. It wakes up every morning and tells us what to do with data. It's a little freaky. And one of the many reasons was these multiple agents running in Swarm and working on the software together. An architect, a security expert, a backend expert, a database expert. And Replit just did one thing early, which is, and maybe Cursor did this too. They built a framework so you could use these multiple agents together efficiently before you could in Claude, right? You could do it earlier. And so now that someone that's just very smart can birth an AI VPM that marketing literally works, in 6 months, the applications we'll be able to build, our jaws will just drop. Well, it will just drop. And already, I don't even know what to do at demo day. We literally got a sponsor that just raised $50 million. Their website was all built in Lovable. We were just laughing about it. But maybe that's not funny anymore. Maybe these apps are so good.
What do you mean you don't know what to do for demo day? I think I guessed.
Because if it's, what's his face from Angel List said software is uninvestable. It should have been on the show. It should have been a topic. Okay, I agree, and I'm struggling with it. And what I mean is, you can show up to a demo day and build anything you fucking want now. In any of these coding tools, that's really good. That is so much better than anyone would show up to a demo day 24 months ago. 24 months ago, half the folks would show up, they didn't have a product. It was barely working. You could make fun of it. It went through it. And now you go and there's no excuse to not have something that's great. Hey, I mean, I could take what we built. Amelia and I could show up to YC and say, we built this AI VP of marketing. It's managed 1 million marketing transactions. It would blow your mind. I'm raising it 80 post.
Just to be precise, Jason, I mean, because the sentence, software is uninvestable. I mean, if software is uninvestable, why bother making the demo at all? Because it's not investable. So clearly saying is you don't invest on a demo anymore, because a demo simply means 24 or 48 hours earlier you kicked off a coding project and you got it done. So there's no information in the demo anymore. Right. I
think for most cases, I don't think there's any signal or information in a demo anymore. Yeah.
Agreed. So I think at the early stages, there's no, so that's what you mean by demo there, because the software is investable. Obviously, it turns out Microsoft stock is holding up pretty well. So software is uninvestable. It's one of those hyperbole statements, right?
Well, what I mean is, listen, one of the reasons I was modestly successful when I started investing is I was a founder that turned into an investor. Okay. And one of the superpowers you get when you make that transition is you know what's better than you. You know the CEOs that are better than you, and you also know who's better at building software. So when I would meet a founder that week for week, pound for pound, had shipped better software than I did, I knew they had a decent chance. If the demo blew me away and the CTO blew me away, even if they're a couple thousand in revenue, I'm like, these kids can't lose. They can't lose.
Jason, can you name one founder who is able to create, architect, maintain agents in the way that you have done? And I'm not blowing smoke up your ass, but Rory, I think this is where Jason's like, oh, it's going to accelerate so fast, so fast. I don't know one founder who has built an AI VP of marketing in the way that Jason has done.
I do think I'm ahead of most of listen, there's obviously there are folks just building agents that are so far ahead of me. I can't even, they mock me on X, and I deserve it. I don't take, if you're better, but I would say for your average AI focused B2B founder, I am ahead of them on this stuff, right? Because I've been doing it for 6 months longer. They'll eclipse me later in this year, but they don't get it. I'm sure you're getting investor updates in March, which even talk about how they're stunned with how much more productive their team is, right? We're all getting these, they're just stunned. I know we've been talking about this, but now it's finally happened. It's not just a few more pull requests and this and that. They're literally, their jaws are starting to drop in March because of what they built in February and late January with these tools now, because they can finish stuff. And when that 10X this year, here's the thing, the rate at which your product has to accelerate will be like nothing we've ever seen before. Nothing we've ever seen before, right?
That's the real version of software is not investable. The real version is there's going to be infinitely more software. So your ability to carve out this little discrete, so software alone will not be a competitive advantage. So there will still be extremely large demand for software, and there, as a result of that, will be very big software companies, but they will have to do something more than, hey, I wrote a bit of code for this particular vertical and this particular use case. That's not just going to get you there. It's going to be some other elements of competitive advantage around network, around distribution, around moat, around vertical knowledge. I mean, I think that's the true version of the statement.
I think, and then listen, at the later, investing in 11 labs today is, it's a very coherent bet, right? It just makes this idea that you could judge if you had the right background, that you could judge early stage experience better than many and write a check and even more so, listen, I had 2 investments. They weren't huge investments, but they weren't tiny, recently that did $1 million or more their first week in market AI investments because the demand was so strong. It's not, but one of them literally 45 days before, 50 days before they were showing me a demo. I'm like, guys, I love you, but I know all the vendors in the market. I put it back in the oven for a little while. I don't think it's competitive. And then you roll out and you dominate the market. There's a lot of reasons, but that level of pace we just didn't see before and is going to accelerate. So how the hell do you pick favorites? Unless they had, what's his name? Frankel from, what's his name, Harry, that did Sono. David
Frankel, yeah.
Yeah, he said he had as one of his never too braggy ones. Oh, I was the only pre-seed investor in Sono, which is just $300 million in 2 years, right? And he's like, why did I invest in it? It's like, well, PhD from this, master's in that, understood the whole space. I met him. Everyone said he was the smartest guy in the world. I mean, that signal still exists in 2026.
Do you want to hear a joke?
What's the joke?
He tried to bring me into that round.
Well, you should have done it.
Oh, no. Boys,
he probably saw that you couldn't see quickly, though. That's that level of depth, right? That you couldn't see, right?
Rory, are you going to have your bets ready for next week?
I will have them for next week, Howie. I will have
there
them.
we go. I'll give you an allowance because it's 10 o'clock in London. And
no, I appreciate that, though. I will. I genuinely will. But I'm still up on my world cloud. I'm up about 6 or 7. I was up 6% at one point in time. I'm not sure, which is the wisdom tree index of all SaaS. Yes, as the idiot version of that. So worth remembering. Now, I haven't looked at today and it's been pretty grim, so who knows? But yes, I will have my act together for next week because it is late in the day there in London.